This is a demonstration of problem 1511B, stock and cash dividends. FKZ Corporation has outstanding 5,500,000 shares of common stock with a par value of $1 each. The balance in its retained earnings account at January 1st, 2020 was 81 million, and it then had paid-in capital in excess of par common of 26,900,000. During 2020, the company's net income was 9,100,000. A cash dividend of 30 cents a share was declared on June 20th, 2020, and was paid July 6, 2020, and a 5% stock dividend was declared on September 30th, 2020, and distributed to stockholders of record at the close of business on October 31st, 2020. You have been asked to advise on the proper accounting treatment of the stock dividend. The existing stock of the company is quoted on a national stock exchange, and the market price of the stock has been as follows, and they give us the market price of the common stock on 9/30, October 31st, and then at December 31st of 2020. The instructions state in Part A to prepare the journal entry to record the declaration and payment of the cash dividend. The problem told us that we have 5,500,000 shares of common stock, and we paid 30 cents a share for the dividend. So the total dividend was $1,650,000. So on June 20th, 2020, when the cash dividend was declared, we would have debited retained earnings for $1,650,000, and we would credit dividends payable for the same amount. Then on July 6th, 2020, we would actually pay the dividend to our shareholders by debiting dividends payable for $1,650,000 and crediting cash for the same amount. Part B states to prepare the journal entry to record the declaration and distribution of the stock dividend. So first we need to determine how many shares of stock we are going to be distributing. We have 5,500,000 common shares. The stock dividend was 5%. So 5% of 5,500,000 is 275,000 shares. Since this is a small stock dividend, we are going to be debiting retained earnings for the market value of the stock on the date of declaration. So the board of directors declared the stock dividend on September 30th, 2020, and the market price of the stock on that date was $12 per share. So multiplying 275,000 shares times $12 gives us the total of 3,300,000 that we would debit retained earnings for. Then the par value of these shares would be at $1 each, 275,000, and the additional paid-in capital would be the difference of 3,025,000. So to record the declaration of the stock dividend on September 30th, 2020, we would debit retained earnings for 3,300,000. We would credit stock dividend distributable for the par value of 275,000, and we would credit paid-in capital in excess of par common for the difference of 3,025,000. Then on October 31st, 2020, we would distribute the shares to the shareholders by debiting stock dividend distributable for 275,000 and crediting common stock for the same amount. The next part of the problem in Part C states, prepare the stockholders' equity section, including schedules of retained earnings and additional paid-in capital of the balance sheet of FKZ Corporation for the year 2020 on the basis of the foregoing information. And it also states to draft a note to the financial statements setting forth the basis of the account for the stock dividend and separately appropriate comments of explanation regarding the basis chosen. So the first thing we're going to look at is that note that we would have included concerning the stock dividend. So in our notes we would have stated something along these lines. On September 30th, 2020, a 5% stock dividend was declared. 275,000 shares were issued at the fair value of $12 per share, resulting in a $275,000 credit to common stock and a $3,025,000 credit to additional paid-in capital in excess of par. The next thing we are going to do is to complete the schedule of additional paid-in capital for FKZ Corporation for the year ended December 31st, 2020. The problem told us that the beginning balance for additional paid-in capital at January 1st was $26,900,000. We had an excess or an additional paid-in capital from the stock dividend of $3,025,000, which gives us an ending balance for paid-in capital in excess of par at December 31st, 2020 of $29,925,000. Next, we're going to complete this schedule, the statement of retained earnings for FKZ Corporation as of December 31st, 2020. The problem gave us the beginning balance in retained earnings of $81 million. It also told us that they had net income of $9,100,000, which we will add to that. And then we had two debits to retained earnings, one for the cash dividend of $1,650,000 and the other one for the stock dividend of $3,300,000. So our ending balance in retained earnings at December 31st, 2020 was $85,150,000. The last thing we're going to do is to complete the stockholders' equity section. The first part of the stockholders' equity statement is common stock. So at the beginning of the year we had 5,500,000 shares at $1 par, but we issued the stock dividend distributable, which was another 275,000 shares. So our total par value for our common stock at the end of December 31st, 2020 was $5,775,000. Again, we had calculated our new balance of additional paid-in capital to be $29,925,000, and the retained earnings at the end of the year was $85,150,000. So total stockholders' equity for FKZ Corporation at December 31st, 2020 was $120,850,000. And that is the conclusion of the demonstration for problem 1511B.